moving right along, I would like to invite Mr. Wale Abioye. He's the Partner Strategy and Customer Solutions Advisory Services, KPMG Nigeria. Mr. Wale Abioye is a partner in the Strategy and Customer Solutions and Advisory practice of KPMG in Nigeria, with focus on customer experience, innovation, and digital transformation in financial services. Over the last few years, he has helped clients across Africa to identify customer and revenue growth strategies and keep pace with the latest emerging technologies to create modern customer-centric organizations. Wale is the project lead for KPMG's annual banking industry customer experience survey, BICX, which has run for over 15 years. He is a core member of KPMG's digital transformation team and regularly provides insights on financial services and emerging technology trends at several panels and C-suite sessions. He is a guest speaker at the third ACAMB National Stakeholders Conference. You're welcome.
All right, good morning, everyone. Just wait for my slides to come. All right, so good morning again, everyone. It's a pleasure to be here. Thank you for the invitation to share very quickly with you this morning before the panel discussion. I'll be speaking on a theme, which is building bridges, collaborative solutions for trusted banking and financial services experiences. So that's the topic for today. I'll take a slightly different slant from the Honorable Justice. My my focus is slightly different. So what I would share, if we go on to the next slide, I'll give you a sense of what's changing within the banking environment, because our focus here today is on customer experience. I would also talk about the pillars of trust, because I would say that's the key word for our conversation, and I'll share some key imperatives afterwards. Now, there's a quote I'll start off with from the CEO of Salesforce. Salesforce is one of the most popular CRM solutions that I imagine a number of banks here use. And he says that trust is a new currency in the digital world, and it's built through transparency, authenticity, and integrity. I think that's the frame for the conversation today. But because I know we also have people or our colleagues from pension, from insurance here this morning, I thought a good place to start off with is to give us a sense of where the industry is today in Nigeria. Just a few stats. When we look at the financial services landscape in Nigeria, we have about 61 million BVNs. When I look at the room, some of our banks now have 30 million, 40 million, 50 million customers. But NIB says we have 61 million BVNs. But then if you compare that to insurance penetration based on the most recent FINA survey is that penetration is somewhere around 3%. Now, some people dispute that it's slightly higher. But then I think the key takeaway is that when you compare it to banking, it's a really small number. And then if you extend that to pension, which is doing a bit better than insurance, you have about 10 million RSA accounts. Now, for me, the message here is our message here today, which is around collaboration. The need for us to work together to drive financial inclusion collectively within the markets in Nigeria. Now, but then what would financial services look like going into the future? Because as the CIBN president said, as bankers, we need to be thinking about tomorrow as well. As we think about today, we think about tomorrow as well. We believe that financial services going forward would be more integrated into our lifestyles. And we see a lot of that happening already today. So we'd see more lifestyle integration, whether in terms of payments, whether in terms of shopping or education, all of those things. Banking will be more integrated into your lifestyles. It would fit within our context at any point in time. So wherever you are, banking will come to meet you. Financial services indeed will come to meet you. But then at the middle, which I'll talk about later on, is the fact that as we go into the future, resolution would also continue to be important. Because as things go wrong, as they sometimes do, resolution will be important. But the difference is that resolution will be more proactive. Resolution will anticipate what might go wrong with customers. Banking, as we know now and going into the future, would be more automated. It will be intuitive. Banks would understand what you're looking to do even before you think about it. And we already see instances of that in our markets here and internationally as well. Banks as well will continue to be the pioneers of trust and security. For all of the slack that we give banks, when we do the survey, we still find that many people still trust banks. Now, they're not happy with banks, but then if you ask people where they will keep their money, I think they will still keep it in the with many of our banks. And then importantly is that going into the future, banking or financial services will be more proactive and it will be forward looking. Now, how would that evolve or how would that play out? On the next slide, which is what we already see happening now, where banking or financial services becomes integrated with the rest of our lifestyles, it becomes more encompassing. So whether you're getting married or you're sending your children to school or you're buying a house or you're paying your electricity bills, you would find financial services integrated in all of those areas. Now, as we talk about trust, what does this mean? This means that, just go back to the previous slide. What this means is that the way we think about customer experience today then becomes totally different. Because your customer journeys, which typically will start at onboarding or when your customers come to your branches or download your mobile apps, no longer become the case. It may then mean that you are only a participant in a journey. It may mean that a journey starts with somebody else, maybe another bank comes to you. It may start in the church, it may start in the mosque, it may start maybe at the supermarket, and then passes through the bank and goes on. Now, what that means for us as banking practitioners or financial services practitioners is that the mindset to experiences, the mindset to dealing with our customers then becomes totally different. It means that if you're going to deliver a great customer experience, you necessarily have to be working with a lot of other people. I know for many of our banks today, we're all doing partnerships with different people, airlines, hospitals, the payment gateways, and all of those individuals who sometimes have issues, but then your customers take out the frustration on you. And that's what it means going forward, that you have to collaborate with all of those third parties. Today, we do bank assurance. Today, we do buy now, pay later. What you have on the screen is just a classic example of what partnership looks like. A number of our banks now have the buy now, pay later product. And if you look at this is a schematic. You have your customer at one end. There's someone else who is the issuer. There's someone else who is the acquirer. And then when you look at the merchants are borderless. Now, what that means is that any of these actors can influence the experience of your customer. And it means that you then need to have a framework for working effectively with all of these third parties to deliver a great experience to your customers. Now, I'll take a slightly different tone, just going into the future. I'm sure we all now are talking a lot about artificial intelligence. And some people say that in the future, life without AI will be like life without electricity. And that's becoming here and now. Now, what does that mean? It means that we're seeing a lot of opportunities. If you go on to the next slide, particularly within banking and within a number of the businesses we play in, where AI is offering opportunities to enhance the customer experience. So for many of our corporate communications or corporate affairs colleagues here, I imagine that some of you are writing your newsletters, you're writing your articles now using ChatGPT or some other form of AI, for instance. And maybe if you're not, then you might want to start doing that. I see some of our HR colleagues as well using AI to review CVs, using AI to write letters to people and all of that. People are using AI to generate content as well. So we would see a lot of the impact of AI in shaping customer experience. There's a technology company today that has developed a solution that allows you to even create your social media ads just using artificial intelligence. So it ingests all of the information around what you are doing, the history of your campaigns, how successful they've been, how unsuccessful they've been, takes all of that knowledge and then begins to recommend the types of ads that you should put forward or put out to your customers. So that's the future of customer experience as we see it. But then AI as well presents some challenges as well, because we're talking about trust. It also presents some trust challenges. If we go on to the next slide, and then the next one. This is a classic example of what you might see happening a bit more in the future, because today we're talking about trusted financial services. So this is one example in Hong Kong where some people used AI to generate all the application forms for taking a loan from a bank, everything, the IDs of individuals, modified their faces to look like the customers that they were impersonating, and they got loans from the banks as well. Now, what that means is that as communications professionals, you then begin to face a different type of challenge. So on one hand, you're getting the benefits, but on the other hand, you begin to have issues because your customers call you and they are complaining about impersonation, they are complaining about fraud and things like that. But on the flip side, we're also seeing the value of the same technology that fraudsters are using to upset the customer experience. This is one technology company that's raised about $11 million. And if you have Shazam on your phone, how many of us are familiar with Shazam? You know, Shazam listens to music for about 3 seconds or thereabouts and tells you the song. Now, what they've built is the same technology, which is called acoustic fingerprinting, that allows you to listen to someone's voice for about 2 or 3 seconds, and then you can tell whether it's a person or not. Now, this technology now is being used in contact centers, because when people call and it's not that customer, within about 2 or 3 seconds, you can tell whether it's a fraudulent individual or not. So let me come back to where we are today in terms of customer experience. So KPMG runs the annual banking survey. We've done that for close to about 17 years now. And when we look at the data in the last few years, we see that customer experience has been somewhat challenged, particularly within the retail segment in Nigeria. So you would see the industry scores for retail below 75 up until last year. Now, good organizations will have scores in the 80s. The fintechs that we surveyed as well got scores in the 80s. But the top-rated bank did not score up to 80. So just sort of telling you where experience is within the industry. Now, if I deep dive a little bit, so we use what we call the 6 pillars of experience at KPMG, and I look at the details of that. If you look to the left, the bottom left of the screen, you would see that the resolution lines or the resolution dots is one of the most inwards. That tells you that as an industry collectively, we're challenged in how we deal with issues, how we deal with complaints. We know that customers are also placing more value on experiences with banks. So if we go on to the next slide, this is an illustration of, a loose illustration of what segmentation is like in the industry. And from the data, from the survey, what we find is that at the bottom where you have most of our customers, so maybe about 90% of the banking industry is in the bottom 2 pyramids currently. And for those customers, trust is at the core of the experience with banks. And trust expressed in the form of security, trust expressed in the form of reliability, trust expressed in the form of integrity as well. And you see that play out in terms of complaints. So if you go on to the next slide, you see the number of complaints in the industry. Now, this is a sample of the top 5 out of 6 banks within the industry. So this is not the entire industry. But we've just taken the top 5 banks out of 6. And you look at how complaints have gone up by 2 or almost 3 times just in the last 2 years. Now, when you look at the issues and we do the diagnostics, I'm sure the first word out of our mouths will be what? Technology. But then, granted or given that yes, we have technology issues, we have downtimes. But if you then look at it at the core, a number of things that a lot of us in this room actually have responsibility for. So things like lack of engagement, things like poor communication, things like low personalization, which then results in unmet expectations, and then ultimately you find the breakdown in trust. As communications professionals, we're at the core of managing communications, managing the quality of engagement within our various institutions, alongside our colleagues in CX as well. Now, what do customers look for when there are issues? What do customers look for? What are those pillars of trust? When things go wrong, what do customers look for? Customers are looking for transparency. They're looking for you to come clean on what the issues are. Up until maybe last year, I would say I'd almost never had a bank email an apology to the whole customer base. Maybe that's a signal that something is changing within the market. Sometimes customers just want you to own up and say, you know what, we haven't gotten it right. So customers are looking for transparency. They're looking for authenticity as well. Authenticity in the manner of communication as well. They're looking for credibility. So sometimes who exactly is coming out to engage? Who exactly is coming out to speak to customers? Who exactly is owning up for what is wrong? We've seen in many other markets where there's serious downtime, and then the CEO comes out and is at the forefront of resolution. So those are things that customers are looking for, and they're looking for responsiveness as well. You know, there's a saying that trust is earned in drops or lost in buckets, and that's the story really for many banks. Customers also want you to put them right. I'm not sure we have a widespread culture of compensation, and maybe the Honorable Justice, I would maybe say from his experience. But that's something that sometimes customers also need to have, where we actually quantify the impact of what has gone wrong and make sure that we're putting customers right or putting them where they should be. I'll skip the case study and go on to the next slide. You can go on to the next. As I begin to round off, how do we begin to build trust in our organizations or within the industry? It starts from inside of each organization. It starts from inside of each bank. It starts from the individual, where as individuals, where as colleagues, we begin to demonstrate integrity at the individual level. And then you go up to competence, where we begin to show that we understand what is going on and we're actually able to deal with it. And then as a group, as a collective, we begin to act in the common interest as well. And then ultimately the outcome you see is what you have as the reputation of your different institutions. With colleagues, what else do we need to do? As communications professionals, as communications professionals, it's important that we begin to unify around the customer journey. Working with many banks, what I see sometimes is that marketing has an idea of what the customer journey should look like because they're responsible for what the customer sees. And then technology has a totally different view because they feel there's a different way of doing it. And then CX also has a different view. But for the people in the room, I think it's important that as we go away from here, we begin to lead and unify our organizations around a common view of what the customer journey should look like. It's also important that we define clear communications pathways. Sometimes when things go wrong, you find that we don't know how to process different types of issues. I've seen scenarios where there's downtime and the relationship managers don't know. There are times where there's downtime and some senior people in the bank don't know. So it's important that we define and we lead the definition of clear communications pathways within our organizations. Every bank really should have an escalation matrix that caters to the types of issues that we're seeing now at the different levels of thresholds that we have. And then, of course, importantly, that we're sharing knowledge and resources across teams as well. With our customers, we go on to the next slide, it's important that we continue to invest in literacy. Sometimes the issues that customers say they have is because they don't know. They don't understand the pricing mechanism. They don't understand why certain events have happened within the bank that you are bound to do by regulation. So it's important that we continue to educate our customer bases. It's important that we're sharing information around data privacy practices as well. As we head into a future where many of us are looking to monetize data, many of us are looking to establish or form all types of partnerships and relationships, it's important that you're carrying your customers along on that journey. Investing in trust. When you look at some of the big technology companies, you find that they go out of their way, maybe because they are compelled by regulation to tell you what they're doing with your data. It's also important that we continue to put the customer in control. I've talked about transparency and honesty as well. And then listening to customer feedback and acting accordingly. With our partners, and I would say, as I said at the beginning, our partners are boundless. So regulators, other financial services players, technology companies, even the merchants we work with. It's important that we're setting clear expectations for those relationships as well, and that on an ongoing basis, we're evaluating them for alignment. But sometimes some partnerships need to start and they need to end as well. Because customer journeys would evolve, customer journeys would not in all cases be within your control. It's then important that we begin to wear a hat of co-creating with our partners as well. That we're co-creating solutions, we're co-creating experiences with them. We're sharing best practices and industry insights with them as well. And then, of course, we're proactively engaging our regulators as well. So I'll stop here so that our panelists can come. I hope I haven't overshot my time. And then we'll continue the conversation. Thank you.